Hi, I'm Peter Rose, founder of Longwood Currency Trading. Visualization is the most important characteristic that I think an individual should have in order to trade in the currency market. In fact, it's so important that if someone wants to work with me either through consulting or through coursework, particularly in a coursework situation, and they don't have the capability to visualize, I just can't work with them. Because it's the whole Forex market, and the reason that we're there is to trade that market. Trading is a superset of hit and bid ask, or looking for support zones, or evaluating whether you have a trade opportunity or whether a price is chattering and you want to exit the trade, or whatever. Trading is a superset of that, and part of trading is the ability to look forward beyond the clutter of the problem to the solution. And once you can see what the solution is, then you're much more capable of understanding the steps that you need to take in order to develop rules to solve that particular problem that you're trying to solve. When I was in college, I started out as a chemistry major and transferred out of that and went into physics because chemistry is a lot of memorization. I have short-term memory problems and all kinds of stuff. But when I was in chemistry, one of the exercises was commonly, here's a compound that we would like you to take all the other crap that's in the room and distill it together and precipitate out this. And the tendency of a lot of people is to look at the morass of information that they have, and some people are very good at that. But you look at the morass of information together, and you say, well, this go together, and blah, 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 blah. It's like a chess game, right? And, man, just taking all that information and putting it together and coming to that solution is very, very complicated process. There are few people that can do that. And it doesn't require visualization. It's memory that gets that done. What we used to do, because I didn't have the capability to do that, I was mystified, is we'd look at the compound that we were supposed to end up with, the precipitate end result. That's the solution. There it is. Now, what several things can we think of out in there? What just several things, if we combine them together, would be able to give us that? And then we go up the next step and we'd say, okay, to get this stuff, what would we need in here in order to get this stuff? So we dry labbed it. We called it dry labbing. We worked backwards from the solution to the process of developing the rules to say, oh, if we start with A, B, C, and K, and Z, or B, and we put those together, we're going to get this and that and the other thing, and we're going to drop that, and it's going to get, and then we're going to end up here. So we work backwards on it. That was the visualization. What am I trying to do? So when you're going in to trade the currency markets, if you think that you're going to listen to somebody talk about fibs or Bollinger Bands or whatever it is that you're going to do, that's just stuff, that's information. And there's too much information. Well, let's look at the Bollinger Band confirmed with the fib level, and let's throw an RSI in there, and maybe a golden moving average crossover involved in that, and what the interest rate theory is. Well, those are 5 different components that you're adding into the mix to try to mimic what somebody else has done. They say, well, these are the things that I use to get this result. If you have 5 things, you have 325 different permutations you can put those 5 things into. For example, if you have 2 things, you have 4 permutations. If you have thing A and thing B, I can have A by itself, I can have B by itself, I can combine A and B, and I combine B and A. So I've got 4 different permutations to 2 things. If I have 5 things, if I have 3 things, there's 21 permutations. If I have 5 things, it's 325. So if you're going to be listening to these people that are out there saying that they use this and they use that and they use this and you're trying to duplicate that. Or you're trying to look at the chart where they're on the chart and they're drawing their frickin' lines and they're saying, oh, because of this happened, then that's what. They're going to be able to do that because you're not looking at the solution. And they're not using fibs or Bollinger Bands in order to determine where their entry should be or anything. Because that's all based on past information. And because of it may work in the stock market, for example, or it may work in other markets, but it's not going to work in currencies for sure. It doesn't make any sense. It's all based on past action. What's the past action based on? You've got to be able to visualize what's going on behind the curtain. You have to be able to see beyond the Bollinger Band and all the other stuff. What did this person see that they then confirm to you that it's a Bollinger Band event mixed with an RSI? They had to get the thing first and then to tell you, oh, it's because the Bollinger Band did this. No, it's not because the Bollinger Band did that. It's because the Bollinger Band just happens later, after the fact, to match up with what happens that they saw happening that had nothing to do with the Bollinger Band. Somehow they saw behind that. Now, there's a lot of these guys that are out there trading and putting on videos, and they frankly just got lucky at 200 to 1. You know, if you get a $10,000 or $15,000 account at 200 to 1, you can run that to six figures in, 10 hops. And statistical likelihood is that in your trading, you'll end up with 10 winners in a row, also 10 losers in a row. That's part of risk management, is understanding those statistics. So they're not able to visualize. They've got a really large account now, and they can trade part of that and make a couple of $1,000 a day, and they're going to try to teach you how to do that. They may be very good at what they're doing, but they certainly don't know how to teach it. I'm looking at all these videos. I watch them. And they don't make any sense. They don't make any sense. Guys are spending hours at the whiteboards showing this stuff and going over all this theory, when it all comes down to visualization. But in order to do that, you have to understand what is the currency market. What is it? What are you trying to accomplish? And who's trying to accomplish it? For what ends? What's their purpose? What are they trying to end up with? Like that precipitate that I talked about in the chemistry example. That's visualizing. And if you can't visualize that, if you can't look at the market for what it is and who the participants are in the market and what the product is that's being pushed around for sale and what the justification or the ramification is, well, the justification and then the corresponding ramifications of trading that and going on bid-ask. You have to be able to do all that. You have to learn how to do that before you're going to be able to sit down and have somebody sit there and say, well, this is how you need to look at this problem to solve. If you sit down with somebody and they're waiting for the London Open flag or a flag pattern or engulfing frickin' candle pattern to appear or whatever, and then they're going to point out, okay, this is when you take the trade, you better run from that because you're not going to be successful. You may be successful. You may be one of the few that are successful. But it isn't going to be because the methodology is correct. It's simply because there was a pattern recognition that you became compatible with that other person. And maybe you have more of a visualization capability than they do, and you're able to say, oh, well, I'm not going to take this engulfing candle pattern because the other stuff doesn't look correct. But, oh, here comes a candle pattern. Yeah, that one looks much different than this one, engulfing candle pattern, and I'm going to take that one. And so you have to be very, very careful about the information that you're consuming as to whether you're going to be able to replicate that in the rules that you develop. And simply saying, oh, I'm going to do this with a Bollinger Band or engulfing candle pattern, those aren't rules. You develop rules for trading, moving average crossover systems and candle patterns and stuff. That's just stuff. That's just information. And the more of that information you have, the more confusing the permutation matrix becomes. Trading currencies is really simple. Why is it that I can get up in the morning, turn my computer on, while I'm brushing my teeth, I can look at the screen after the platform comes up, and in 15 seconds determine whether I'm going to be trading in the next 5 or 10 minutes, or whether there's even going to be a potential trade within 15 minutes, and either at that point set up some limit orders and go back to brushing my teeth and stuff, or just don't do anything. And then when I come in, if I've set my limit orders or whatever, it might take 10 minutes or 20 minutes for that condition to manifest itself, and then I'm not shooting for 40 pips. I'm shooting for 5, 10, 8 pips, whatever I can get. Now you might say that, oh, that's not a whole lot of pips. Well, it isn't, but then it's easy to get a small number of pips. It's kind of difficult to get 30 pips on a position unless you're up on the daily chart. But if you're on the daily chart, your risk management has to change, and your bank has to be much deeper than what these folks are alluding to. If you notice, a lot of the guys that have these small accounts that build them up to big accounts, 99% of them, give up 95% of them, go broke 3 or 4 or 5 times along the way. Because the risk management isn't compatible with what they're doing in the early stages when it doesn't count, and you got $500 on the line and you're popping that and doubling that, and it really doesn't matter until you get up around $2,000 or $3,000. Look, if you can take $500 and run it to $3,000, that's great. Is that going to change your life? Is that going to provide you wealth in your retirement? No, it's not. Try taking $100,000 and turning that into $500,000 or $600,000 in 6 weeks. Like some of these fools will take $100 and run it to $500. There's a percentage is the same, right? 100,000 to 500,000, same as 100 to 500. And yet, you're going to be able to take $100,000 and run it to 500,000 in 3 weeks, 3 months, because it changes. The problem solution changes. Because you actually have to have rules to trade a real account instead of fucking around with $3,000 or $4,000 pushing minis around, or $500 at 200 to 1 leverage. You're kidding yourself. Just because you're given that leverage doesn't mean that you should use it. You must have the ability to visualize the problem so that you can identify what the solution to that problem should be. Once you identify what the solution should be, you can develop the process to solve the problem. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.